Thank you, Mr. Chairman. And to all of you, welcome. I know how much you must look forward to these meetings that we have here. But today, my colleagues have focused a great deal on the Basel III endgame. It's something I'm deeply concerned about, too. What we have here in Washington, regretfully, are regulators that are in a competition with bureaucrats and other jurisdictions. They seem to be regulating for regulation's sake. I have a very difficult time when massive bodies of regulation are put forward and bureaucrats here try to tell us that the impact is going to be minimal. I'd like to quote specifically from Vice Chair Michael Barr, who's leading the effort on the Basel III endgame. He says that the impacts of the new requirements they're proposing are going to be minimal. In fact, specifically, he says, quote, "The phase-in will allow ample time for banks to adjust their balance sheets and activities and to build capital over time. In fact, most banks already have enough capital today to meet the new requirements." So the message that the public is getting is that these massive regulatory proposals they're putting forward with Basel III is going to have a very minimal impact on your banks. And I would just like to go back to the tool everybody else is using. Would anybody here that believes that the impact of Basel III would be minimal, raise your hand, please. Well, I'd like the record to reflect, Mr. Chairman, that nobody raised their hand. No one believes that the impact will be minimal. In fact, I think one of the most infuriating patterns of behavior I see here among the regulatory class in Washington is either an unwillingness or a refusal to take into account the knock-on effects of the regulations. Mr. Diamond, I'd like to come to you. Your bank has stated publicly that the Basel endgame proposals would increase capital requirements by some $50 billion. That's not an insignificant number. There are obviously very real costs that are associated with this proposal, and I would like to get your perspective on how this proposal would impact not only your bank, but the markets and the economy more broadly.
Yeah, I think, inside a bank, you try to look at every loan you make and every relationship and every client and every country. And obviously, you want to do a good job for your shareholders in the long run. No one tries to be rapacious with customers or employees in the short run. And that, so it'd take a lot of loans and immediately make them unprofitable. And I'll give you a specific example, mortgages. I've already told our people that mortgages should not be in the balance sheet. And of course, we can't securitize them either because we haven't passed the securitization law, so it will diminish certain kind of mortgages. It'll particularly diminish mortgages for lower income people. And because the cost of all this is actually much higher on a $150,000 mortgage than on a jumbo $2 million mortgage. And I can go down the line, CDFIs, financial companies, farmers, and then we've already mentioned the extreme effect on market making, which is just a critical function to help finance companies around the world and help people manage money for retirees and veterans and state pension plans to manage their money. And so that one is hard to figure out the full extent of that. I think it actually may cause issues in the marketplace.
All these knock-on effects I think are very negative. Ms. Frazier, not limited to your bank in particular, but just if you could comment on how this impacts the U.S. banking system's competitiveness on an international basis.
This diminishes the U.S. banks' competitiveness on an international basis. I think as we've all reflected, the U.S. financial system is the envy of the world. The U.S. banks play an incredibly important role supporting multinationals and supporting the Western financial system and its operations. It's a strategic asset of the U.S.
Indeed, and I think it's incredible and competitive advantage. Yet the regulators that are focusing on Basel III seem to be hiding behind the claim that this is merely a harmonization of capital requirements. And when you think about a harmonization of capital requirements, it would lead you to believe that U.S. banking capital is somehow below that of our European competitors. And if that were the case, this might allow regulators to prevent, quote, a race to the bottom. But this is not the case. I want to quote from Chairman Powell. Chairman Powell says, quote, "The proposal exceeds what is required by the Basel Agreement, and it exceeds what's been required and what's been done through implementation by other jurisdictions." So, Mr. Solomon, I'd like to come to you. You made reference in your testimony about the competitive disadvantage that this unnecessarily stringent proposal would create for financial institutions, for the economy more broadly. And would you mind to just comment on how this proposal, if it were enacted, would compare us to other jurisdictions you're dealing around the world, but how it would make our competitiveness be affected in capital markets specifically versus other nations?
Thank you for the question, Senator. As you stated, the capital requirements in the Basel III normalization in the UK, in Europe, in Japan, and in other jurisdictions are meaningfully less significant than what's being proposed here. And so if you look at activities that we compete in around the world, particularly in market making and those types of activities, the U.S. capital markets are the strongest capital markets in the world. I think it's one of our big competitive advantages that everyone comes from all over the world into our capital markets. If you think about IPO activity and debt capital raising, it's done to a great proportion for international capital in our capital markets on a relative basis. And this would just shift that balance. It would push more activity into other jurisdictions. It would make banks in other jurisdictions more competitive. And I don't think that strengthens the U.S. position over time.
And conversely, American banking system less competitive as well.
Thank you.
Thank you very much, Mr. Chairman.